Let's start off on that currency front, because for the most part we've had the unit being expected to trade around that 154 mark to the dollar. Anticipated large dollar sales by the NNPC, a big support factor to consider. What's your view on the local unit and where we're headed from here on out, because we're sitting now at that 155 mark?
Yes, what we've seen since coming back from the holidays on Tuesday is that there's been marginal devaluation week on week if I was to compare Friday figures to today's figure. But demand that was unmet at the WDAS on Wednesday wasn't actually much. So just like the CBN governor said, we're beginning to see demand wane for the US dollars. This will be associated to the elections being over, number one, and then number two, there's this other window for you to purchase dollars, the WDAS, which had been active. Volumes have declined a little bit too over there, showing that the pressure on the Naira is easing off.
Well, with that demand waning, we've got the CBN also saying that dollar sales are expected to be provided between $250 and $300 million from here on out, which means no more draining of reserves at the rate that the Reserve Bank's been doing so far. We've just seen data released, though far from encouraging, showing that reserves have dropped back to $35.66 billion by May the 5th. What are you making of where Nigeria stands in that regard and ability to actually bulk up?
Yeah, the figures as shown is still substantially affected by what had happened in the last quarter. Inflows from oil sales, we expect them to trickle in. I mean, in the next few days, we expect that reserve figure to jack up. Let's not forget that we subsidize a lot for the fuel. We consume a lot in this country. So it's not just earning a lot in terms of price and volume produced. So subsidy itself is an issue. As I speak with you, there's scarcity in some parts of the country. So it's obvious that there's also pressure from that side. So basically, in the next few days, we'll see a clearer picture of what's going on. But I think that the reserve would actually inch up to what it's been in the last 1 to 2 weeks.
Let's turn focus to the bond market specifically. What's the story behind the recent rise we've seen in bond prices? What's actually driving demand on that end?
Okay, on fixed income, especially on the short end, we're seeing a lot of interest from foreign banks. We've not seen too many deals, but we've seen a lot of interest on pricing and demand of information concerning bonds and T-bills of short maturities, because these yields have been attractive. Since the end of the year, end of last year, what we've seen is that people sold down a lot to meet obligations and take profits on positions that they are taking. But right now, the yields have gone up so much that compared to other forms of investment in the country, I mean, that's risk-free securities, these yields are considered to be very wonderful. So right now, we're beginning to see some level of liquidity trickling. The rescued banks have a lot of money right now because they are accessing funds from central bank using AMCON bonds that they had received. So they are not necessarily taking a lot. So places who have surplus funds are also putting pressure on T-bills, especially at T-bills and bonds of short-term maturity. So yields of double figure from that were at 13 or 12 half have been dragged down to around 10%. So basically, that's what's happening.
How sustainable do you see this elevated demand actually being moving forward?
Okay, except for inflation coming out to be very negative, that is increasing or going up further than what it was last month, it will be sustained. This demand will be sustained. If inflation goes further up, then you tend to want to compare the yields at which you are buying securities to inflation. Are you hedging inflation at all? What spreads would you be making comparing your yields on investment to inflation, basically? So this is another factor. But the feeling in the market right now is that yields on the short end curve are very, very, very attractive, and people have been buying. It's been bullish all week.
Bankole, part of the CBN governor's rhetoric this week has been the fact that he's made mention of the CBN possibly having to take further monetary policy measures if government does not tighten fiscal policy. What's your outlook in that regard, and what are you pricing in where the debate's being had right now on reducing that 2011 budget and getting it closer to initial proposals that were placed forward by the president?
Okay. Just before the elections, we had some additions to the initial budget as proposed by the presidency. This caused a little bit of row before the elections, but now that elections are over, we're beginning to see steps being taken to sorting that out. And it's looking like it's tending back to what it was. The government is going to tighten the budget, meaning that they would not spend as much as they have proposed. This also means that they would not borrow more than they initially asked for, or borrowing will be reduced.